All right, guys, welcome back to the 8th key knowledge dot point of Unit 1 Outcome 1. And this one, we're going to be talking about market research and initial feasibility studies. So definitely a little bit of language in there at least, which you will not be familiar with. Hopefully by the end of this video, you will be. All right, so here is our study design as per usual. So you can see where we are. And you can see we're moving our way through it by now. Only another couple of key knowledge dot points to go after this one. So you can see market research, initial feasibility studies, nothing more than that said there. So what is this all about by way of intro? So look, in the last key knowledge dot point, in the last video, we looked at the importance of business concept development. Remember all that stuff about what am I going to sell? How am I going to sell it? How am I going to beat my competitors? All that sort of stuff. And we said that the idea here was that before you went kind of too far down this rabbit hole of spending money and investing time into this business idea that you had, you wanted to think about the answers to these questions to kind of stop yourself. If even at these early stages, it sort of seemed like this was potentially not a good idea. So really, this stage here, this market research and initial feasibility studies, is kind of taking that a step further. So once we've gone through that process of the business concept development, we're just going to be thinking about our idea in a little bit more detail here to really think about, is this something that's going to be worthwhile? Is this going to be doable? That'll make more sense as we go through this. Basically, what we're talking about here is reducing the risk of starting off a business which is going to fail, essentially. And you'll see how that kind of plays out. So just like a couple of statistics for you to put some of this stuff into perspective. So this stuff is from the Australian Bureau of Statistics, so should be pretty solid. So as of June 30th, 2021, there were approaching 2.5 million actively trading businesses in Australia. Okay, so just to put some numbers around that. That's a lot of businesses, obviously. Now, what's more interesting to us here is this second bit of information here. So this 87,806 increase in the number of businesses. Actually, that's interesting, 20 to 21, because I think that was during COVID. So that's actually quite surprising to me. But look, 15.8% entry rate. So in other words, 365,000 businesses starting in that 1 year period. And a 12% exit rate. So 277,000 businesses ending, finishing, for whatever reason, over that same period of time. Now, look at those numbers. That's quite interesting. It's 365,000. Easy maths there. So basically what we're saying is every single day in Australia, there's 1,000 new businesses starting up. So it's a lot of businesses. Now, let's look at the sort of the flip side of this. Okay, survey by an outfit called FundSquire, who provide funding to startup businesses. Now it's a bit small there, but if you look closely, this gives the main reasons why businesses basically failed. Okay, so new businesses, why they failed, and you can see lots of different reasons there. But I'm going to point out the top reason, the 42% there. 42% of startup businesses fail because there's no market need for their services or products. Now, if you look below at the rest of that list, okay, failing because they've run out of cash, failing because they didn't have the right team running the business. That's all of the other reasons in that list you see there are to do with the actual running of the business itself. Whereas that main one at the top, this 42%, so almost half of businesses fail because there's actually no market need for what that business is offering. So in other words, think back to what we've done so far, this business concept that we've come up with. What they're saying is with that business concept, well, it was a good idea in our head, but the general public, the general community didn't agree because they didn't want to buy whatever it was that we were offering. So again, this reinforces the need to really think about before we, like I said before, going down the rabbit hole, if you want to call it that, investing time and money into this business, really think about that. Is there actually a market need? Are people going to want to buy? Is there a need? Is there a want for what it is that we've come up with, this business concept in our head? So that's kind of what this is all about. So once we've developed that business concept and we've answered those simple questions we just looked at before, basically what we're looking at here is how realistic is it that this business is going to end up being successful, okay? Will our proposed product, our proposed service attract customers? Am I going to be able to generate enough sales to cover my costs and therefore make a profit? Because if the answer to either of those two things is no, then probably you want to shelve this idea right there and then. Now, on to now what this video is actually all about. Remember, market research, initial feasibility studies. So this is the two methods that you can use to actually come up with answer to those questions that we just had on the previous screen. Okay, take them in turn. Market research, process where you collect and analyze information about a specific market. And mostly that's to do with the activities and the behaviors of customers and competitors within that specific market. Okay. The aim here is to provide you with enough understanding of the market that you're considering entering so that you make informed decisions about the direction of your business. So rather than guessing, oh, I think this is a good idea, I think this is what we should do, the idea of doing a market research, it gives you actual data, actual information that you can base those decisions on. Therefore, you're making an informed decision rather than you're just going on your own kind of guesswork, your gut feeling, or whatever it might be. Okay. Now, you're collecting two types of data: quantitative data, which is numerical, and qualitative data, which is non-numerical, which could be survey answers to survey responses, that sort of things. And basically, you're trying to answer a range of questions that you want to know before you progress with this business venture of yours. Okay. Questions such as, now this is not an exhaustive list, but this is, this is some good basics to at least get yourself across. So how many competitors are there out there in the market for what I'm proposing to do? What are the strengths and weaknesses of those competitors? How strong would your competitive advantage be compared to those competitors? How can a business gain a competitive edge in this particular market? How many customers are there in this market? What are those customers looking for? And what price are those customers willing to pay for this type of a product? So you're trying to come up through your research to answers to those types of questions. You might already have a vague idea of the answers to some of that, but chances are you're not going to know all of that. So that's what you're trying to achieve through carrying out your market research. There I'm just highlighting the differences between qualitative and quantitative. The quantitative ones are obviously the ones in the orange because they're going to be numerical answers, and the qualitative are the purple ones. That's your market research. So the other side to this was initial feasibility studies. Now, market research you've probably heard of before. There was probably no huge surprises there, but initial feasibility studies, this is a little bit more specific. Okay, so basically what this is an assessment of the viability and the potential for success of your proposed business idea. Okay, so market research is actually the first part of this process. So market research kind of sits within initial feasibility studies, but then we go a little bit further and consider some other areas before we really start to invest our time and money into this venture. Okay, so first off, market feasibility. So you refer to your market research, just discussed, competitor customer analysis, all of that stuff. So that's the first stage. So like I said, the market research sits within initial feasibility. So that's stage one covered off. Stage two, you think about the operational feasibility. So you start to think about what resources you're going to need, what staff are you going to need, what kind of staff you're going to need, what equipment, what type of equipment are you going to need, what's potentially the cost of that equipment going to be. Start thinking perhaps about the location you're going to want to operate from. And already when you start thinking about this kind of stuff, like for example, if it turns out that the equipment you're going to need is going to cost millions and millions of dollars, that might automatically rule this business venture out. So that's the kind of point of thinking about these kind of questions, to think about, what are the chances of me being able to actually kind of pull this off? Thirdly, commercial viability or feasibility rather. Can I afford the setup costs or at least have access to them? So in other words, access loans or finance to be able to afford them. How long would it be before I made my first sale? Now, with a lot of businesses, there's a really long lead time between starting the process of setting up the business and actually selling your first product or service. Are you going to be able to survive in that interim period? How long before I create a profit? Now, many businesses don't make a profit in their first year or even a couple of years of trading. So are you going to be able to, again, survive through not making a profit over that period of time? Lots of looking at sales forecast, cost forecast, cash flows, all this sort of thing when you're doing commercial feasibility. And yeah, look, forecast. I mean, forecast kind of implies guesswork. This is not an exact science. You're making best estimates of what these things are going to be. But you definitely want to be thinking about them and making those best estimates rather than just jumping in with both feet and finding out later that actually this was not ever going to be feasible in the first place. Your own ability. Okay. Now, in Key Knowledge 2, we looked at the characteristics of successful managers, entrepreneurs. Do you actually possess any of these qualities, skills, characteristics? Do you have the skills needed? If not, can you access what's missing? So in other words, go into partnership with someone that kind of complements your skill set so that between the two of you, you kind of cover as many of those skills and characteristics and qualities as we talked about then. Because if you don't have a lot of those characteristics and you're planning operating on your own, probably not much chance of success. Legal feasibility. Is it even possible to start this type of business under current laws and regulations? Are there any laws or any regulations that you need to be aware of as you move forward with this business venture that might actually mean you cannot even operate this business, or at least in the form that you want to operate it in? Has it been tried before? Has anyone else tried this business concept previously and failed? If they did, you need to know why they failed. How can you make sure that you do not make the same mistakes that they did? Okay. And in business, generally speaking, learning from your own mistakes and those of others is a really important part of the process. If you talk to any successful business person, any successful entrepreneur, one of the key things that they'll tell you is that they made tons and tons of mistakes along the way, but the key is to learn from them and ideally don't make them again. So just summarizing everything we've kind of gone through there, right? Once we've developed our business concept, which was the previous Key Knowledge point, we then need to go dig a little deeper and go through this process of doing some market research and initial feasibility studies. Okay, so we need to establish the viability of the business concept, give some kind of indication of whether this is going to, potentially going to be successful. Okay, minimizes the risk of investing lots of time and money into something which right from the outset was potentially unlikely to succeed anyway. Coming back to this thing we looked at the beginning, this 42% of startups business fail because there's no market need for their services or products. I can pretty much guarantee you that a pretty high percentage, if not all of those, probably did not go through these processes we've been talking about in these last couple of Key Knowledge points. Someone's come up with this business idea and just kind of jumped in and steamed ahead with it without considering all of this stuff, the business concept development in the first place, and then doing some market research and feasibility studies to actually think about, is this a realistic idea? What are the chances of this actually working? And backing out with some real data and some real information. Okay, so that is it for that Key Knowledge point. I will see you in the next one, guys. Cheers for now.